For years, the performance of gold and silver has been overshadowed by the seemingly unstoppable rise of the stock market. However, the tides are turning and the precious metals complex is poised to potentially assert its dominance in the coming years. What are the driving forces behind this potential shift, and what implications might it hold for savvy investors? Join us as we embark on an illuminating journey to uncover the answers. At the heart of this narrative lies the intriguing relationship between gold and the broader stock market as represented by the S&P 500 index. The gold to S&P 500 ratio, a metric that compares the value of gold to the performance of the stock market, is a telling indicator of the relative strength between these two asset classes. As we delve into the data, we find that this ratio is currently approaching a significant resistance level that was established back in 2015. This level has acted as a formidable barrier, with the ratio struggling to break through it on multiple occasions since 2022. The mere fact that the ratio is once again testing this critical juncture suggests that we may be on the precipice of a potential pivot point in the gold stock dynamic. What does this resistance level mean, and why is it so important? Historically, when the gold to S&P 500 ratio has managed to breach such significant resistance levels, it has often signaled the start of a prolonged period of outperformance for gold relative to the broader stock market. Should this pattern repeat itself, it could have far-reaching implications for investors, potentially ushering in a new era where gold becomes the preferred destination for those seeking to safeguard their wealth. As we shift our focus to the performance of the precious metals themselves, the numbers are truly astounding. In 2024, gold has surged by an impressive 33%, while silver has exceeded 35% in returns, outshining the vast majority of other asset classes. This remarkable turnaround is particularly noteworthy when we consider the previous underperformance of precious metals relative to the stock market. For years, investors had grown accustomed to the seemingly relentless ascent of equities, leading many to overlook the inherent value and resilience of gold and silver. However, the tide has turned and the precious metals complex has emerged as a shining beacon amidst the volatility and uncertainty that has gripped the financial landscape. This begs the question: what factors have contributed to this resurgence, and more importantly, can it be sustained? At the heart of the precious metals' recent outperformance lies their long-standing reputation as safe haven assets. In times of global economic and geopolitical turmoil, investors have historically flocked to the perceived stability and intrinsic value of gold, seeking refuge from the volatility that often plagues traditional financial instruments. The past year has been no exception, as the world has grappled with a tapestry of challenges, from lingering supply chain disruptions to simmering geopolitical tension. Amid this backdrop of uncertainty, the allure of gold has only grown stronger, with some analysts even going so far as to recommend bullion as a prudent investment, despite the asset's previous underperformance relative to the S&P 500. This renewed interest in gold's safe haven properties has had a ripple effect, driving up demand and fueling the metal's impressive gains. As investors seek to protect their wealth from the potential pitfalls of a volatile market, the appeal of gold as a steadfast store of value has only intensified. Should gold succeed in breaching that critical resistance level on the gold to S&P 500 ratio, the implications could be far-reaching. Historically, when the ratio has managed to overcome such significant barriers, it has often signaled the start of a multi-year phase of outperformance for gold relative to the broader stock market. This potential shift could attract a new wave of investors, particularly those who have grown wary of the perceived overvaluation of equities and the increasing volatility that has come to characterize traditional financial assets. As these investors seek to diversify their portfolios and protect their wealth, the allure of gold as a reliable hedge against market downturns may become increasingly compelling. The prospect of a prolonged bull market in gold holds the power to reshape the investment landscape, as investors who have long favored stock-based portfolios may begin to reconsider their asset allocation strategies. This shift could have profound implications for the performance of other asset classes, as capital flows towards the precious metals complex in pursuit of stable returns and capital preservation. While gold has undoubtedly captured the lion's share of attention in the precious metals space, the performance of silver deserves equal scrutiny. Historically, silver has tended to lag behind gold in bull markets, but it has also been known to experience explosive rallies that can catch investors off guard. As we look towards the future, the potential for silver to shine brightly alongside its golden counterpart is palpable. Should the Federal Reserve resume its money printing efforts, for example, in response to declining reserves or other economic concerns, silver could experience a significant uptick in demand as investors seek out inflation hedging assets. Moreover, the inherent industrial applications of silver, coupled with its scarcity relative to gold, could further amplify its appeal in a market environment marked by heightened volatility and uncertainty. Savvy investors would be wise to keep a close eye on silver's trajectory, as its performance could serve as a valuable barometer for the broader precious metals complex. The actions and policies of the Federal Reserve will undoubtedly play a crucial role in shaping the future direction of the precious metals markets. As the central bank continues to navigate the delicate balance between taming inflation and maintaining financial stability, its decisions will reverberate across the investment landscape. Of particular concern is the Fed's slowed quantitative tightening QT program, which has resulted in a slower than anticipated decline in the central bank's balance sheet. This development has fueled concerns about the potential for the dollar and financial stability to be impacted, further bolstering the appeal of gold and silver as safe haven assets. Moreover, the specter of the Federal Reserve potentially resuming its money printing efforts, either due to declining reserves or other economic factors, looms large. Should this scenario unfold, it could provide a significant tailwind for the precious metals complex, as investors seek to hedge against the inflationary pressures that often accompany such monetary policy shifts. Navigating the intricate interplay between the Fed's actions and the performance of precious metals will require a keen understanding of the underlying economic and market dynamics. Investors who can stay attuned to these developments will be better positioned to capitalize on the shifts that may occur in the months and years ahead. Closely tied to the Federal Reserve's policies is the growing concern surrounding the central bank's balance sheet and the potential risks of hyperinflation. As the Fed's balance sheet has declined at a slower pace than many had anticipated, there are mounting worries that the falling bank reserves could trigger the next banking crisis. This backdrop only serves to heighten the appeal of gold and silver as asset classes with inherent value. When faced with the specter of financial instability and the erosion of purchasing power, investors often turn to precious metals as a reliable means of preserving their wealth and safeguarding their portfolios. The risks of hyperinflation, a scenario where prices spiral out of control and the value of fiat currency plummets, have become a topic of increasing concern among market participants. In such an environment, the intrinsic value and scarcity of gold and silver become even more alluring as investors seek to protect themselves against the potential ravages of unchecked inflation. As the global economic landscape continues to evolve, the appeal of precious metals as a hedge against these systemic risks is only likely to grow. Investors who recognize the importance of diversifying their portfolios and incorporating these time-honored assets may find themselves better equipped to weather the storms that may lie ahead. The current state of the financial markets is marked by a palpable sense of unease and volatility. Traditional asset classes, from equities to fixed income instruments, have been subjected to heightened levels of uncertainty as investors grapple with the myriad challenges that have emerged on the global stage. Amidst this backdrop of turbulence, there is a growing sense of optimism and anticipation surrounding the precious metals complex. As gold and silver approach those critical resistance levels, the possibility of a significant shift in market dynamics has begun to capture the attention of savvy investors. The reasons for this heightened interest are multifaceted. Firstly, the impressive performance of gold and silver in 2024 has served as a tangible reminder of the inherent value and resilience of these assets. Investors, wary of the potential pitfalls that may lie ahead for traditional financial instruments, are increasingly drawn to the stability and diversification that precious metals can offer. Secondly, the looming specter of a potential breakout in the gold to SP 500 ratio has fueled speculation that a new era of outperformance for gold and silver may be on the horizon. Should this scenario unfold, it could signal a profound shift in the investment landscape as capital flows towards the precious metals complex in search of a haven from the volatility that has come to characterize the broader markets. As we bring this analysis to a close, it is clear that the precious metals space is poised to play a pivotal role in the future of the financial markets. The dynamics unfolding before our eyes, from the approaching resistance level on the gold to SP 500 ratio to the impressive performance of gold and silver, suggest that a turning point may be within reach. Whether you are a seasoned investor or just beginning to explore the world of commodities, it is crucial to maintain a vigilant and adaptable approach. The coming months and years could present both challenges and opportunities, and those who are able to anticipate and capitalize on the shifts in the market may be poised for substantial gains. As we continue to monitor the evolution of the precious metals complex, one thing remains certain: the story is far from over. The potential for a multi-year bull market in gold and silver, driven by the ebb and flow of economic and geopolitical forces, is a narrative that deserves our rapt attention. By staying informed and nimble, we may just find ourselves at the forefront of a profound transformation in the investment landscape. Until next time, may your investments be fruitful and your portfolio resilient. Thank you for joining us on this captivating journey through the world of precious metals.